Hello and welcome to our first couple attendees. We're going to get started in a couple of minutes. In the meantime, I've posted a link to the pre-survey in the chat. If you complete both the pre and post survey for this workshop, you'll be entered into a draw to win one of two $100 Tim Hortons gift cards. So this is a great opportunity to complete that survey before we get started. So again, for anybody who wasn't here when I started my spiel before, I've posted a link to the pre-survey in the chat. If you complete both the pre and post survey for this workshop, you'll be entered into a draw to win one of two $100 Tim Hortons gift cards. We're going to get started in just a couple of minutes, and so this is a great opportunity to complete that pre-survey if you haven't already. So before we get started, I'm just going to go over a few quick housekeeping things. So my name is Chad, and I'm here to help with any tech issues that might come up throughout the presentation, as well as with the Q&A at the end. So if anything seems to be going wrong for you, please send me a message in the chat, and I'll do what I can to make sure that gets resolved so that you're able to fully enjoy and learn from the presentation. If you have any questions throughout, there's a Q&A button along the bottom of your screen, similar to where you would find the chat. The Q&A is going to be the best place to put any of those questions because it keeps it separate from anything that might be going on in the chat, so that when we get to the Q&A period at the end of the workshop, we're able to address those questions for you. We're also going to be launching a couple of polls throughout. The polls are completely anonymous. They're just there to help give your presenter a better understanding of where you guys as the audience sit. So if you can answer the polls, again, completely anonymous, just helps improve the overall presentation having that feedback. And then I am going to now pass things over to Deb, who has just a little bit of information for you from Mohawk.
Hi, thank you. So good day, everyone, and thanks for joining us for today's session. My name is Deb Clinton, and I am the Communication and Programming Specialist for the Mo Money Financial Literacy Resource Center. So I'd like to take a moment to acknowledge that my home and the college are situated on the traditional and unceded territory of the Haudenosaunee and the Anishinaabe nations within the lands protected by the Dish with One Spoon Wampum Agreement, and is currently home to many Indigenous people across Turtle Island. So Mo Money is here to help, and we have many ways that you can get involved with Mo Money. And here are just a few of them. You can follow us on social media. And we also have a Money Matters module, which is a free course on my Canvas. My Canvas is where you access your classes and can sign up for free classes. So the Money Matters module is where you can learn about budgeting, starting a business, and big purchases like cars and houses and much more. This event also qualifies for co-curricular record credits. So our event code is 6465, and Chad is going to put the link that you can complete the form and you can get credit for attending today's session. So November is National Financial Literacy Month. Across Canada, educational and financial institutions are holding events that champion financial literacy for all Canadians. The Financial Consumer Agency of Canada, FCAC for short, ensures federally regulated financial entities comply with consumer protection measures. It promotes financial education and raises consumer awareness of their rights and responsibilities. In consultation with Canadians, they have released a 5-year National Financial Literacy of Canada strategy titled Make Changes That Count. This strategy is a call to action to make the financial ecosystem more accessible, inclusive, and effective for all Canadians. So now I'd like to pass it over to Lindy, our student facilitator, Chad and Craig from CFE for financial matters affecting international students. Enjoy.
Thanks so much, Deb. I will just share my screen now so we can start the presentation. Okay, hopefully everyone can see the screen and slides okay. So welcome everyone to today's workshop. My name is Lindy and I am a Mohawk student in the Social Service Worker Intensive program. So today, for the presentation, the Canadian Foundation for Economic Education is pleased to partner with the National Bank of Canada to provide a series of workshops to help post-secondary students across the country get a better handle on our money. Today's presentation aims to provide you with information and tools that will help you improve your relationship with money so you are better able to achieve your goals and live the life you want. The workshop will last about an hour, and then we will have a live Q&A at the end of the presentation. We also sent a pre-survey that we hope you completed. There will also be a post-survey sent at the end of the session. If you fill out both, you'll be entered into a draw for one of two $100 Tim Horton gift cards. So first, a little bit about the program. CFE and the National Bank. Sorry, technical error. Yes, so finances impact our life in many ways. So we want to provide you with information that will help you better navigate your finances in a more empowering way. In 2020, there was a survey conducted with over 1,500 students to learn more about what students want in regards to financial literacy. And here are some of the results that we found out. So our research identified that nearly 2/3 of students are currently dealing with financial stress. And 57% of students are looking for help preparing and working with a budget. Not only that, but half of students also reported having difficulty generally knowing how to manage their finances. We hear your concerns and we understand your challenges. That's why we put together today's presentation. Today, we're going to talk about 4 major topics. First, we'll discuss the value of goal setting and how you can do it the smart way. We'll talk about the components that make up a SMART goal and how you can apply them to your life, especially when creating a budget. Next, we'll talk about budgeting and spending and where you can control your spending. We will then look at different ways to save your money as international students. Finally, we'll look at one of, if not the most important financial matter topic that affects international students, taxes. We'll walk you through the basics of the Canadian tax system and what you need to know as international students when filing your taxes. Coming out of this workshop, you will have a better understanding of how setting goals can help lead to more financial security, knowledge of different methods you can use to budget, as well as some tips on spending and saving as pertains to budgeting that will help you take more control of your money. You will also have a better understanding of Canada's tax system and possible ways to invest tax more efficiently. For our first topic, we're going to talk about goal setting and how to do it the smart way to get you on the path of living a financially healthy life. It is valuable to have goals and to create a specific plan for achieving them, because having a sense of direction and motivation can help us get to where we want to be in life. So let's get started with goal setting. Here's what we're going to cover in this section. First, we're going to talk about what exactly financial freedom means. Second, we'll explore how to achieve financial freedom. And third, how setting SMART goals can help. Financial freedom is a term that we often come across nowadays. Different people come up with different definitions. Some say it's about buying what you want, when you want. Others say it's having no debt, and some say it's being able to support yourself. These answers are all a little vague. Which brings us to the question, what is financial freedom? In general, financial freedom means you get to make life decisions without being overly stressed about the financial impact, because you are prepared. You control your finances instead of being controlled by them. I'm just noticing a message in the chat. I'm just going to check that really quickly. Okay, hopefully it's okay. As a general rule, we'll answer questions at the end of the session, so please save your wonderful questions until then. But going back to financial freedom. So financial freedom is not necessarily about being rich or having a ton of money, but rather about having enough to cover your expenses so that you can spend your time doing what you like rather than just doing things because you need to earn income. We hope that with financial freedom, you'll be living your life, not just to survive, but also to thrive. So the path to financial freedom isn't a get-rich-quick strategy. And financial freedom doesn't mean that you're free of responsibility from handling your money well. Quite the opposite. Having complete control over your finances is the fruit of discipline, hard work, sacrifice, and time. Financial freedom has to be personal. To know how to achieve financial freedom, you must first ask yourself, what does financial freedom look like for you? Is it the freedom to choose a career you love without worrying about money? Freedom to travel places you've never been? Freedom to even retire perhaps a decade early? Whatever it is, to achieve financial freedom, you must first identify what it means to you. You need to be specific. Next, it's important to learn to manage your money by making a budget and establishing routines that you stick to every month. So financial freedom doesn't come by accident, it comes from careful planning. And budgeting is an important step to building wealth with purpose. Once you start learning how to manage money, you may realize you made some mistakes with finances in the past, and that's okay. Another step to financial freedom is to pay off previous debt and to make paying off that debt a priority. And once you've paid off debt, you can make saving and investing a priority. Investing is another way of saving, making your money work for you by ways of dividend or interest. And in order to invest, you need to have money saved up. So the sooner you start saving, the sooner you can invest. So there is no shortage of advice you're likely to receive about how to effectively manage your money or what you should be doing with your money. But in the end, it's up to you to decide, because you're the one who is going to decide what your needs and wants are and what you really want or need in life. A key factor that can affect your decisions are your goals. If you don't have goals, then goals won't play a role in your money decisions. But if you have goals, hopes, and things you want to achieve in the future, they will impact the decisions that you make. Why can goals make a difference? Because if you have goals, you'll have to consider the possible trade-offs as you make decisions today. And saving to achieve a goal can be rewarding, satisfying, and help build your confidence. Achieving a goal can help you prove to yourself that you can accomplish what you set your mind to, and inspire you to achieve other goals and achieve other things. A lot of good habits are about changing your behaviors and building upon your successful achievement of various goals. Though money doesn't buy happiness, it does play an important role in most people's lives. We may wish it weren't so, but it's true. Earning, spending, saving, investing, losing, or giving away money. We make all kinds of decisions, often daily, about money. Money can help us out, but it can also cause problems. For example, going into debt can cause stress, tension, and anxiety. To avoid money problems, it's best to try and stay in control of your life and your money and how it affects your life. You'll want to maximize the help that money can provide and minimize the problems that it can cause. Today is the best time to start to take control of your money, and the best way to take control is to be prepared and plan. Planning how to handle money is not only for those who have lots of money. In fact, the less money you have, the more important it is to plan because you want to get the most for the money you do have. As you plan, consider the different time periods. The short term, such as what you hope to achieve over the next year, or possibly even the next week or month. The medium term, which is the next 1 to 3 years, and the long term, as well as the future, which is like 5 years or longer. Short term goals can be very helpful as they serve as stepping stones to achieving your medium term goals. For example, if you're looking to save up for a car, it can help to break it down into monthly savings goals over the next few years. Then use medium goals as stepping stones to long term goals, and so on. Doing so gives you some checkpoints to see how you are doing over time, and to think about whether your goals have changed and if you want to change direction. As you succeed with your goals, find a way to celebrate these goals and be proud of what you've accomplished. If you are in your teens or early 20s, your thoughts are probably mostly on personal relationships, your education, work or job opportunities, entertainment, and the like. You're probably also thinking about possible careers, education options, perhaps even moving out on your own. Over time, though, at different stages in our life, our priorities can change. Taking control of your financial affairs means thinking about the various stages of your own life cycle. We can't only think about what's important today, we also have to think about what will be important to us in the future. So finding a balance between the present and the future is important. Developing a plan that helps you live as happy a life as you can, now, next month, and into the future, is really valuable, and setting goals can help with that. So I imagine many of you might have heard of the idea of SMART goals, but it's about setting goals that are specific, measurable, attainable, realistic, and time-based. So by using this approach, we can eliminate generalities and guesswork and have a clear timeline that makes it much easier for us to track progress towards our goals and to identify any milestones that we may be missing or hitting. It essentially helps us be accountable when setting and achieving goals. So I can give a bit of a personal example of a SMART goal. So a while ago, I wanted to save up to volunteer overseas. This was definitely before COVID, by the way. But what I did was I looked at the cost of volunteering, kind of made a budget, and then set a specific timeline for how I was going to achieve the budget necessary to go on this trip. So I put aside savings for my part-time job over a certain period of time so that like by a certain date, I could prepare to go on the trip and have the necessary finances to make that possible. Okay, so here's a worksheet that you can use after this workshop to set up some SMART goals. This worksheet provides you with some questions to ask yourself to ensure these goals are SMART, and you will receive this worksheet in a resource document after this workshop. And I really encourage you to practice setting a SMART goal using this worksheet, because the more we practice setting goals, the better we get at doing them and making sure we're accountable with them. Okay, so some key takeaways from this section of goal setting. We've explored how important it is to define what financial freedom means for us on our own personal terms. And we've also determined that it's important to have a goal and to have a roadmap for where we want to go, but also to be mindful and keep checking in to think about our goals and priorities as they shift and evolve over time. And just being mindful of how SMART goals can help prepare us for freedom. All right, so the next section is budgeting, and we're going to explore some different strategies that you can use to try and take control of your money. So to get started with budgeting, we're going to cover first some terminology, so we have a basic foundation for our discussion. We'll also talk about the importance of budgeting and how budgeting isn't meant to be controlling or restricting, but rather to be a means to help you live a life that is more financially free. And third, we'll talk about a few different types of budgeting that have worked for different folks, so you can figure out what might work for you. So to understand the basics of budgeting, we're going to look at some terms. So personal net income is the amount that we have available to spend. It's not necessarily the amount that's on our paycheck, but rather the amount that we have available to us after we factor in expenses like income taxes and pre-tax contributions. The next term is fixed expenses, and this is anything that doesn't change over a period of time, such as a rent payment. And these are You'll know a fixed expense is a fixed expense if it's something you have to pay on a regular basis, whether that's monthly or annually. And these are usually expenses that are due by a certain date as well. The last factor is variable expenses. So the definition of variable costs can differ, but we like to define it as anything that you can buy in a store or expenses that are within your control. So you can decide how much and if you will spend on these items. In other words, these are expenses that you can't control. Now that we've got some 3 important terms down, let's move on to the basics of budgeting. So budgeting is the process of creating a plan to spend your money. It's about balancing your expenses with your income. It's actually quite common for the thought of budgeting to sometimes give rise to negative emotions, especially when we're new to it. When these emotions occur, it's helpful to remind ourselves that budgets aren't meant to be a constraint. They're meant to be a helpful tool so that you're controlling your money rather than letting your money control you. When developing new budgeting habits, please remember to be kind and gentle with yourself. Developing new habits takes time, and it can also be challenging because we're learning a new skill. So it's good for us to practice self-compassion as we learn and grow and figure out what budgeting practices work best for us. If we're new to budgeting, it can sometimes be hard to know where to begin. There are several different methods, and the effectiveness of them will vary depending on your personality and financial situation. But there is a budgeting method for everyone, and it's never too late or too early to start. While it can be tough to know which budgeting method is best for your lifestyle, especially if you're new to this thing, it can help to start by pinpointing your biggest money issue and then working backwards. Today, we'll be covering 3 methods of budgeting that you may or may not have heard of. So these methods include zero-based budgeting, 50-30-20 budgeting, and pay yourself first budgeting. So a zero-based budget requires you to spend every dollar you earn on paper and to give each dollar a job. This ultimately results in a checking account balance at or near zero at the end of the month after all fixed and variable expenses and savings have been taken care of. At this point, you start the next month over with a new spending plan and a clean slate. For example, if we look at the picture on the slide, if you earn $3,250 a month after tax once you graduate, then everything you spend, save, give, or invest should add up to this amount. That way, you know where every single one of your dollars is going. A different budgeting method is the 50-30-20 approach. So this budgeting approach allocates 50% of your personal net income for essentials like rent, utility, and groceries. Then 30% of your budget is for your own discretionary spending, like eating out, attending concerts, or going shopping. And then the remaining 20% of your budget goes towards your savings or paying off debt. The principle itself is simple enough. Divide your income into 3 categories so you can live your life to its fullest, while maintaining a proper budget and still having enough left over for the future. Keep in mind that percentages may need to be adjusted based on your personal circumstances. For example, if you're not someone who likes to go out for cocktails, perhaps then you can lower your 30% allocated for wants to 20%, and then you could put an additional 10% into your savings. Also, when you're a student, it's possible that your needs could be above 50%, and so you may want to have that reflected by having perhaps a lower want section. All right, so the final method we're going to explore is pay yourself first budgeting. So paying yourself first simply means putting money into your savings account first, as soon as you get paid and before you spend money on anything else. Essentially, most people tend to prioritize their bills in the order of bills, fun, and saving, which means that oftentimes there is little to put away in a savings account, let alone invest. But if you use pay yourself first budgeting, then that means you set money aside before you find other reasons to spend it. It will be important to gauge how much you can save through trial and error. a good rule of thumb is to be saving about 10% of your take-home pay. If you can save that amount or more, that's great. Even if you can only put away $20 a month, that's good too. Try to put away more as a percent of your income over time. Don't spend all the raises you get through work, but rather use some of those raises to put away more money for savings. Having some savings also allows you to persevere through life's challenges. A general rule of thumb is to try and build up 3 to 6 months of your personal expenses into a rainy day fund or an emergency fund for those unexpected things in life. Paying yourself first has been a standard recommendation from a lot of financial experts because it paves the way to financial freedom faster. By paying yourself first, you are mentally establishing saving as a priority and putting yourself in an investor mentality. All budgets should have a line for savings, and this line should be one of your fixed expenses. All right, so now we have a quick little Zoom call that we've prepared ahead of time. So if y'all could take a moment to answer that, that would be much appreciated. Okay, thank you all so much for answering this poll. So as we can see, there's actually quite a few different results. We see a diversity of actions. I'm really happy that it seems like folks have resonated with at least one of the budgeting approaches. And as we can see, everyone has a different preference. So there's almost like an equally balanced distribution of what folks prefer. And the most important thing is that you find an approach that resonates with you and works for you. So thank you so much for reflecting on budgets and thinking about what works best for your lifestyle. All right, so some key takeaways from this budgeting section are that once you have a plan for your money, it gives you the freedom to control where you spend your money, and it helps you move towards financial freedom. And budgeting is a unique process for each of us. So let's find the approach and method that works best for us. The best one is probably the one that works for us month to month and is as simple as possible. So again, a reminder just to be patient and kind with ourselves, as sometimes it takes some time to get to a stage where we feel confident in budgeting and managing our cash flow. And yeah, the final point is just that it's important to try and include a savings line in our budget because savings is a really important part of financial well-being. All right, so now that you know 3 basic budgeting methods, let's go over the most important financial matter affecting not only international students, but pretty much everyone else, which is spending money. After all, we budget to understand our spending patterns. And so in this section, we'll go over some helpful things to keep in mind when spending money as an international student. So today we're going to cover 3 important areas, including accommodations, food and groceries, and affordable fund plans. And we'll try to share some tips on how to save money in each of these areas. So how much should you be spending on rent, food, or your phone bill, and all these other necessities of being an international student in Canada? Ideally, perhaps as little as possible as is needed for your lifestyle. But we know that it can be tricky sometimes. So we're trying to help you navigate as best as we can. So an important aspect of being an international student is your living situation. Because you're coming to a new country and you're trying to figure out where you'd like to live, whether that's in residence or off campus. And on campus housing is often promoted as a great way to become engaged in campus life, to make friends, and to start living independently. But on the other hand, living off residence is also usually more affordable, and you can explore the different areas in the region you're staying in. So I've personally lived both on and off campus, and they've all been great great at different times for different reasons. I definitely have noticed that living off campus is more affordable. Something I've observed is that a lot of students will live in residence during first year, but move off campus in later years. But again, accommodation is really dependent on what you want from your student experience, essentially. So definitely think about your own wants and needs as you think about budgeting for accommodation. If you're planning to live off campus, consider going for a neighborhood that is safe, but not trendy, because that will help you save on rent. And another option is to find some roommates to share a house with, because having roommates can mean you can split costs like the internet and utilities. And roommates are also great as a social resource and to keep loneliness at bay when you're in a new city. Make sure to think ahead about what qualities you would like in a roommate, and consider doing a background or reference check as well to confirm with your landlord that roommates are allowed. Finally, to cover yourself from any possible risks, make sure to get everything in writing. Tenancy agreements protect not only your landlord, but also yourself in sticky situations. If you are going to have roommates, it's better to get a standard contract and ask your roommate to have this all written out so that you have a record of how you're sharing expenses. Another significant cost you might incur as a university student is food and groceries. Often people sometimes spend more on food than we realize, and having food expenses can add up over time. So here are some tips to keep in mind that can help lower monthly food expenses. The first tip is to decide what to eat and to meal prep. And weekends can be a really great time for meal prepping. If you prepare and freeze enough food to last a couple days or an entire week, this will save you time, and it'll probably also save you money if you eat out less. Another option is to stick with generic or store brand groceries whenever possible. The ingredients are usually similar to brand name versions, but you aren't shelling out extra money for the brand name. Another option is to look at unit prices. For example, if you look at the price of a liter of milk, you can see that maybe different brands will have different prices. But make sure not to buy more than you need, because if there's a lower unit price, but you don't use up all the item, then that might actually end up just wasting your income, essentially. And then another option is to create a shopping list and to stick with it. If you plan your meals ahead of time and know what you'd like for each meal, then it will help when you're shopping because you're less likely to buy more than you need for the meal. Another option is to also buy in bulk and then split costs if you have roommates. Finally, something else you can check out is apps like flip.com or Reebee. So these apps show flyers for local areas, and then that way you can quickly look to see what type of deals are available and how much things are costing. And another thing you can do with these flyers is if you bring them to a store, a lot of stores will offer a price match. So that way you can do all your shopping in one area, but hopefully you can ask the store to give you like the prices that are advertised in a different flyer. So you can save time and also save money. Okay, moving on to phone plans. So it's well known that a lot of folks coming to Canada point out that Canada has really expensive phone plans compared to pretty much everywhere else in the world. And it's true. So how can we lower this high expense? Here are some tips. So one thing to try out is to look at smaller carriers like Public Mobile, Freedom, or Lucky Mobile. So the big three telecommunication companies are in Canada are Bell, TELUS, and Rogers, and they usually offer the most expensive phone plans. So consider using smaller carriers who also offer the same coverage as larger companies, but usually at a lower cost. Another thing to keep in mind is to consider avoiding the subsidized phone trap, because sometimes carriers will offer plans that are like, oh, you can get like a $0 iPhone, but you have to sign up for a 2-year contract. And actually, when you sign up for this contract over the course of 2 years, the cost of like financing this phone might actually end up costing you more than you would have paid if you just paid retail for the phone and got a separate phone plan. So our advice is to consider buying a used phone and then selecting a cheaper monthly plan without the phone payment bundled in. This could end up saving you hundreds of dollars. Another option is to shop around for the best deal. For example, Costco is a store that will have sales a couple times a year, where they'll give you a large amount of gift cards. And some other carriers will also have deals on days like Black Friday, which is actually happening now because it's late November. So if you're looking for a phone, this might be a good time to shop around. And another good time to shop for phones is also Boxing Day. There's usually a lot of good deals there as well. And a final tip is to try and use Wi-Fi whenever you can. because data costs a lot here. So if you can use Wi-Fi, it means you're not spending your data as much, which can help with costs in the long run. And a lot of places like the university or a college, or like cafes, libraries, a lot of places will have Wi-Fi. So make sure to take advantage of that when you can. All right, so this brings us to the end of this section on spending. We've covered some ways to save on accommodations, groceries, and film plans, and we hope some of these tips might be helpful in your day-to-day life with managing your finances. All right, moving on to saving. As touched on previously before when we talked about budgeting, saving is an important part of budgeting. And by making saving a priority for you, you're putting yourself in an investor's mentality, which helps you have a strong foundation for financial freedom. So in this section, we'll explore some things you need to know about saving and investing your money. So to get started with saving, here are some things we'll be covering in this section. We'll explore why it's important to save. From trying to buy a bigger item or just to give yourself more financial resiliency when life throws you a curveball, savings can be really beneficial. We'll then talk about two programs in Canada, the Tax-Free Savings Account and the Registered Retirement Savings Plan, which can help you figure out how to save and invest more effectively. So why do we save? There's a lot of reasons, and some of them are that saving can help us grow our money because when we put money in a savings account, we get compound interest on those savings. And so it's essentially a way to earn money without having to work for it, which is really nice. Another reason is that saving can help us achieve our goals. So having savings for larger goals can be really helpful. And savings can also give us a safety net that help us bounce back easier from any challenges that life throws our way. Saving money can also help us reduce our taxable income. Yes, it's true. So we'll move on to the next section where you can find out how saving can help with that. So we'll be exploring two accounts, and often there's a question of, is it better to use a registered retirement savings plan or a tax-free savings account? Because both of these can help you save on taxes, but each one works in different ways. And understanding these investments better will help you know when to use one or the other. And you can also use both in tandem. So the TSFA stands for a tax-free savings account. You don't need any earned income to contribute to a tax-free savings account, which may make it more advantageous for international students if you work a limited amount each year. The gains you make from any investments and savings in the account are tax-free, meaning it's all yours. It's a great incentive for saving and for maximizing any earnings you may get. But the name savings account is actually a little misleading because the tax-free savings account functions instead as an investment basket. You can pick what to put in the basket from a wide array of financial assets, including exchange-traded funds, guaranteed investment certificates, stocks, bonds, and yes, even actual savings accounts. This means you're not usually limited to the small interest rates that traditional savings accounts offer. Tax-free savings accounts also have very few withdrawal rules associated with them. You're free to withdraw at any time without penalty, but there are government-mandated limits on how much you can contribute every year. The maximum you're allowed to put into a tax-free savings account each year is known as the contribution limit. For 2021, it's $6,000. Additionally, you can also carry forward any unused contribution room for future years. So, a registered retirement savings plan is a government-sponsored retirement plan with significant tax benefits, but it works a little differently from a tax-free savings account. An RRSP is what's called a tax-deferred account, meaning that the government created them specifically to provide tax breaks to those who invest money in RRSPs as a way to motivate them to put away money for their retirement. So instead of your earnings being tax-free, as is the case with a tax-free savings account, any money you contribute to an RRSP will be exempt from income taxes the year you make the deposit and will only be taxed years down the line when you withdraw it. RRSPs are therefore an effective way to cut down a current year tax bill. The deduction limit is usually 18% of your income or $27,830 for 2021, whichever is less. Now that we've covered some fundamental differences between registered retirement savings plans and tax-free savings accounts, the question is, which one should you be using? The rule of thumb all depends on your income level, what you think you'll be earning in the future, your spending habits, and your savings goals. In an ideal world, you'd be able to contribute to both an RRSP and a tax-free savings account and meet the maximum contribution limits each year. But that's not always financially feasible for everyone. So it becomes a question of identifying which account is better suited to your particular financial goals and situations. Generally, tax-free savings accounts are better when you're a student. And RRSPs are more useful when you have an annual income over $50,000 because that allows you to have larger savings on taxes. So here's a little quick poll. Can international students open a tax-free savings account or registered retirement savings plan? If you could quickly vote in the poll, that'd be much appreciated. Thank you all for sharing your thoughts. And so the correct answer is yes, international students can open a TFSA or RRSP if they are 18 years of age or older and have a valid social insurance number. So as an international student, you're eligible to start contributing to a registered retirement savings plan before obtaining or applying for permanent residency, as long as you have a social insurance number and have earned income and file an income tax return in Canada. So some key takeaways from the savings section. We touched on the importance of saving and investing your money to make it work for you. And we also explored some of the benefits of how tax-free savings accounts and registered retirement savings plans can benefit you on your journey to financial freedom. Now that we've covered savings and how it can help you reduce your taxes, let's move on to our next section, which is Canada's tax system and how it affects you. So in our last section, we will give you an overview of the Canadian tax system. To learn more about taxes, SAFE also has a full workshop on understanding personal income taxes in Canada. Canada's tax system is progressive. This means that as you make more money, the percentage of that income which gets taxed increases. We'll also describe some important nuances about the tax system and how you can save on taxes through deductions and credits. Lastly, we'll help you understand who needs to file taxes in Canada and the deadline to file your taxes. So Canada's tax system is based on the self-assessment principle, which means that you must complete a tax return each year to report all your income sources, and this includes wages, tips, bonuses, scholarships, bursaries, and the like. And you have to file this report to the Canada Revenue Agency and to declare your eligibility for any deductions or tax credits to calculate whether you owe tax or will receive a refund. The Canadian Revenue Agency is responsible for collecting taxes and other amounts, such as federal, provincial, and territorial income tax and goods and services tax. The government collects this money to pay for operating expenses and delivery of government services. Taxes are the reason we can access services like libraries, hospitals, and roads free of charge. The government also redistributes these taxes to lower income and vulnerable Canadians in the form of things like child benefits, employment insurance, and old age security. So again, like we said, Canada has a progressive tax system, which means the more you earn, the more you'll pay. Under this system, money is divided into income brackets, which determine your applicable tax rate. So a common mistake is to assume that all income is charged at the rate of the highest income tax bracket you fall into, which is not true. So you're actually charged progressively, which means that you pay the rate in the lowest bracket first and only pay a higher rate on each additional dollar. And so that's called your marginal tax rate. And we'll give an example to help illustrate. So for example, let's say if you earn $1, you have to pay 10% tax on that. But on the second dollar, you have to pay 20% taxes. And then on the third dollar, you'll instead have to pay 30% taxes. But you never paid 30% on the whole $3, so you're not paying 90 cents of tax. Instead, you're paying 10 cents on the first dollar, 20 cents on the second dollar, and 30 cents on the third dollar. That means you actually paid only a total of 60 cents of tax, which works out to an average tax rate of 20%. The deadline to pay taxes, for those who earn enough to do so, can be confusing because the date by which you must pay does not always align with the date that you must file. So, employed individuals have the same payment and file date, which is April 30th. That's because their taxes usually get taken off at the source on each paycheck, so their tax calculation is simpler. Self-employed individuals must pay any taxes owed by April 30th, but they have until June 15th to file their return. That's likely because their taxes are more complicated, because they are responsible for setting aside money throughout the year, keeping organized books, and storing proof of expenses. The Canadian Revenue Agency also charges a fee for late filers, 5% of your balance owed, plus an additional 1% for each month late. So it's a really good idea to try and file your taxes on time. So note the term taxable income, because not all of your income is necessarily going to be taxed, because there are certain deductions that you can claim to arrive at a taxable income number. So for example, if you make a contribution to your registered retirement savings plan, that amount may be deducted from income, thereby reducing the amount of taxes you have to pay. For example, if you earn an income of $60,000 and put $5,000 into a registered retirement savings plan, then you will be taxed on the adjusted amount of $55,000, so you won't be taxed on the full $60,000. And when you are able to deduct money from your income, your total income and hence your marginal tax bracket are very important. For the highest earners, a registered retirement savings plan is much more valuable in terms of dollars and percent of contribution you can receive back from the government. Some other examples of deductions you can claim include moving expenses if you had to move more than 40 kilometers to take a job, and also childcare expenses for children under 16 years old. So definitely make sure to keep track of all your receipts when you move, because you can use that on your tax claims later on. There are also tax credits. Deductions from income reduce your taxable income, whereas tax credits are amounts that reduce the tax you pay on your taxable income. The more tax credits that apply to you, the more you can reduce your income tax. Everyone who files a tax return gets the basic personal amount as a non-refundable tax credit. It reduces your payable taxes, and if you earn less than the 2021 federal filing amount of $13,808, then you will pay $0 in federal income taxes. But if you don't own any taxes, you don't get a tax refund, which is why it's called a non-refundable tax credit. Certain medical expenses or charitable donations can also result in tax credits that can reduce the taxes you pay. So make sure to keep track of all your medical and donation receipts as you pay for those. So here we have a quick video that explains the difference between tax deductions and tax credits.
Filing taxes is really nobody's idea of a good time, but one small joy you can get from it is in watching your tax bill go down as you add in deductions and credits. But what exactly is the difference between a tax deduction and a tax credit? Aren't they kind of just interchangeable? While both can be good for your final tax return, they are very different. First up, let's look at tax credits. A tax credit reduces your overall tax liability. So if you have a $1,000 tax credit, that means you no longer owe $1,000 on your taxes. A tax deduction reduces how much of your income gets taxed. Let's say you have a $1,000 tax deduction. It is applied to your top income tax bracket. So if you made $55,000 last year, your top tax bracket is 22%. That deduction means that $1,000 of your income won't be taxed. So you save that 22%, which would equal $220. This all makes tax credits sound pretty great, right? Most of the time, yes, but there are some catches. Many tax credits aren't refundable. What that means is, let's take this $1,000 tax credit again. But let's say you only owe the IRS $600. You don't get that extra $400. Not all tax credits are non-refundable, but many popular ones, like the life.
Right, so hopefully that video was helpful. It is an American video, but a lot of the principles also apply in Canada.
Filing taxes is really nobody's idea down as you add in deductions and.
Okay, there we go. So, international students studying in Canada can have a difficult time determining whether they should file Canadian income taxes. This is because international students do not always owe taxes or qualify for refunds or credits. Here are the basics for determining whether or not you need to complete a tax return. So keep in mind that Canadian earned income is always taxable in Canada. So if you're employed with a Canadian company, that's a clear indicator that you should file a tax return, regardless of whether you're a resident or non-resident. Therefore, if you're an international student and you're employed in Canada, you'll likely find that you either owe tax or are being owed a tax refund. Another factor in determining whether you should complete a tax return is whether you've established significant residential ties to Canada and whether you can be considered a Canadian resident. So some examples of significant residential ties include a home, whether owned or rented, a Canadian bank account or driver's license, living with a spouse or dependents, or other significant social ties to Canada. Like all other Canadian residents, international students under this category are eligible for GST credits, tuition carry forward credits, and other provincial credits or tuition rebates. Students who spend less than 183 days, which is the equivalent of 6 months, in Canada, and who do not establish residential ties in Canada, are generally considered to be non-residents. Non-residents are not eligible for benefits and credits and are only required to file a tax return to pay taxes or to receive a refund if too much tax was paid on income from Canadian sources. This also applies to deemed non-residents, who are students who have established significant residential ties with Canada, but are considered residents of other countries with which Canada has a tax treaty agreement. Residency status is determined by the Canadian Revenue Agency on a case-by-case basis. If you aren't sure of your status, it is best to contact the Canadian Revenue Agency directly for guidance. Generally, though, we encourage you to file a tax return even if you don't owe taxes, because you might get tax credits. So here's a little checklist that you can use for your tax filing journey in Canada. Keep in mind that most common expenses students can claim as non-refundable tax credits include tuition fees, medical expenses, interest paid on your student loans, and donations. You may be eligible to deduct certain expenses from your tax payments against your Canadian earned income. Moving expenses such as transportation and storage of personal effects, travel, and temporary accommodation may be considered eligible deductions. Save your receipts. However, you can't deduct moving expenses if your only income at the new location is scholarship, fellowship, or bursary income that is entirely exempt from tax under the current legislation. Additionally, in order to claim expenses in Canada, you must keep documents proving them for a period of 6 years after you have notice of assessment issued by the tax office. So some key takeaways from this section. So hopefully you now have an understanding of the basics of how Canada's tax system works and how it's a progressive system, and hopefully a better understanding of whether you have to file a tax return or not, depending on whether you're considered a resident or non-resident, as well as a checklist for some helpful things to consider when you're filing your tax return in Canada. All right, so in summary, let's briefly review what we've talked about today. So we've gone over some important things in goal setting about how it's important to create our own definitions of financial freedom and to set SMART goals that can help us achieve it. We've explored 3 different budgeting approaches and also explored how different budgeting approaches will work for different folks. And as the poll results showed, different people resonate with different strategies because we all need different things. And just remember that learning to budget can be a journey, so let's be kind to ourselves as we're practicing and learning. We also explored some different ways to save on expenses, and we hope that you'll take away something that works for you and helps you in this regard, whether it's with accommodations, groceries, or phone plans. We also learned about different saving options and different ways to take advantage of interest and different ways of investing your income in tax-free savings accounts or registered retirement savings plans. And we hope that you'll be able to pick the options that work best for your saving and investing needs. We also hope now that you understand the basics of Canada's tax system and whether you need to file a tax return, as well as some things you might need when you're filing taxes. So coming out of this workshop, we hope that you now feel comfortable with the following. The first is we hope that you have a better understanding of how setting goals can help lead to more financial security and success. Secondly, we hope that you have a better understanding of different methods and options for budgeting, as well as some tips for spending and saving and how those are an important part of budgeting. Thirdly, we hope that you now have a better understanding of Canada's tax system, so you can save and invest your income more efficiently. So here are some next steps you might want to consider as well in your journey to financial freedom. The first step is to figure out a SMART goal that will help you succeed on your journey. Another option is to learn more about deductions and credits that you might be eligible for, and to keep track of these items throughout the year to make sure to save your receipts, because you might be able to save quite a bit when it comes time to file your taxes. Another option is to find a budgeting approach that works for you and to try implementing it in your life and see how that goes. We will also be sending out a resource sheet, and you're always welcome to consult the safety program for resources and more information. So thank you so much for being here today. We really appreciate it. And we will be sending out a post-workshop survey, so we'd really appreciate if you can complete that. It's really important that we ensure these workshops are providing you with the information you need. And again, if you completed the pre-survey and you also complete the post-survey, you will be entered in a draw for one of 2 $100 Tim Hortons gift cards. So that brings us to the conclusion of the presentation section of this webinar. So if anyone has any questions, please feel welcome to pop them into the Q&A section, and I will do my best to answer them.
Awesome, thanks, Lindy. So one of the questions, not necessarily a topic-related question, but just they were curious, can they rewatch the webinar? Yes, the webinar is recorded, and if Deb is able to confirm where it will be accessible, it will be something that you guys can get access to for sure.
Right. Thanks, Chad. Yeah, we will be posting on our webpage, and I put the webpage in the chat. Let me just see if I can do that again for people. Probably check next week. We'll definitely we'll have all 3 of the webinars there. So
Awesome.
Okay.
And for Diana, who was having trouble accessing the PDF, if you Google National Financial Literacy Strategy, it's going to be your top result there, the strategy from 2021 to 2026 for Canada. That's going to be where you're able to access all that information. So it looks like we do have a question for you, Lindy. So I'll be starting studies in Mohawk this January. Also, I'll be traveling with my wife. She has a work permit. Would you recommend contacting an accountant to help us handle this situation?
Yeah, that's a really great question. Thank you for sharing it. Also, I want to say congrats on getting into Mohawk. I hope you have a great time with your program. And yeah, as for contacting an accountant, I guess it really does depend on your personal situation. Like, if you feel the advice would be helpful and it's within your budget, like, yeah, it can definitely be really helpful to connect with a financial consultant because they'll have a lot of knowledge about how to navigate the tax system in Canada and just what you would need to file and all of those things. So definitely, like, get in touch with someone if that's something you would be interested in.
Okay, we'll keep our eye open for any other questions.
I think we overwhelmed everybody with so much information. It was fabulous.
Yep, there's definitely a lot in the presentation, and Lindy did a great job getting it across.
You did.
Thank you all so much for your kind words. And thank you to everyone for being here today and listening.
Okay, so here we've got another question. You said that income tax is in April. How do I know if I need to be aware of doing my tax return this year? I don't know how much will it take for us to get our social. Like how long before they get their social?
Yeah, that's a really good question. I just want to say that great job for thinking ahead and planning and like already thinking about how to implement this information in your life. That's awesome. And I'm wondering if by social you mean social insurance number, perhaps? And that's a really good question. I'm not sure because I'm a domestic student, but I wonder if there is an agency or someone you could get in touch with who might have more information. Yeah. I'm wondering if any of the CP representatives could maybe speak to this as well, perhaps.
Yeah, let me jump in a little bit here on this. I think kind of lost track a little bit here. Was this the same individual who mentioned coming over to start in January? So Lindy mentioned that you need to file your taxes in April, but the tax year is a calendar year. So if you don't have any earned income in Canada during 2021, you won't need to worry about filing taxes in April of 2022. It's really just for that calendar year. So I'm not sure if that helps on your question or not, but let us know if you would like more details, and we can try to answer that for you.
Does anybody know if Service Canada is actually taking appointments, or is it still all online?
Actually, a good question. I think you can, but I don't quote me on that.
Yeah,
I'm not 100% sure either.
yeah,
I thought some of those places had reopened, but not certain either.
yeah.
Oh, I noticed someone mentioned in the chat that CFE might have workshops that students could further access and benefit from. Would someone like from CFE like to speak to that a little bit?
I'm not sure what the meaning is of workshops for this. Like we do have other workshops. This is the third one we've offered with Mohawk. And so as Deb mentioned, the recordings of the other two will be posted. And then we do have other webinars that we will talk to Deb and others in Mohawk about offering in the future. But no firm plans right this second. So
Yep. That's why I think it's really important that you fill in the pre and post survey, because if there are other topics that you want to know about, we'll be looking at your feedback and certainly would design something if there's a need for it.
yeah, that's a great point,
Deb.
Like one of the questions we specifically ask in the post survey are like, we ask, are you interested in attending more of these webinars? And then you have a chance to do a write in comments. What are the topics you're most interested in hearing about? So as Deb said, please complete those surveys. You'll be entered into a draw for Tim Hortons gift cards, and they can help inform what's offered in the future.
And I did just add the link to the post survey into the chat for everybody. So
awesome.
Oh, I also just noticed some kind comments in the chat, like saying that this webinar has been helpful and just like thanking us all for being here. So yeah, thank you. Those are really kind. And I'm really glad that this webinar was helpful.
Yeah, maybe we'll just give another minute or so. If folks do have questions, please ask them. But if there aren't any other questions, we can wrap up soon. But please go ahead and put them there. We're happy to try to help answer them. There we go. At least that got a couple things. Question in the Q&A and also in the another thing in the chat.
Yeah, I can speak to those. So I see that someone asked a question about when we need to pay our tuition in the Q&A. And it's a really good question. I believe Mohawk actually has an information page somewhere about the specific tuition payment deadlines for each semester. So I would encourage you to look at that. I think from what I remember with my personal experience, we actually, I'm not sure about international students, but I think for domestic students, we pay sometime like close to the start of the semester. But there is usually a late fee if we exceed that deadline. So definitely like try to find out the date for when tuition is due and get it in before then. I think Mohawk usually also
Deb,
does send out a reminder. Oh, sorry.
Deb, do you have the link that Lindy's
Yep,
referring to
I
at
just-
all? Is that
Yeah, I just
There we
put
go.
it in the chat. I
perfect?
was one step ahead of you.
You were. That's awesome. Thank you.
Oh, I will say usually as well, Mohawk tries really hard to send out a reminder email, I think, of when tuition is going to be due. So you will hopefully get advance notice. I think the notice sometimes does go to your Mohawk email. So if you have a lot of emails, just make sure that you actually see it, because sometimes it can be a lot. And then I noticed another person asked in the chat that they're coming to, I'm assuming, to Mohawk in January 2020. And so we're wondering if they needed to file taxes in April 2022, I'm assuming. I hope I said that right. But yeah, I think so. Usually you file taxes for the previous year. So if you're filing taxes in April 2022, it would be for the 2021 year. But if you're not going to be in Canada in 2021, then you would probably not need to file a tax return
Right.
in April 2022. So
I
that's a
think
great
that's-
question. Thanks for clarifying. Yeah, I just saw a kind comment in the chat, like just thanking us again, like, yeah, thank you so much for being here as well and for like so enthusiastically participating and for sharing your questions, because it's really great for us to ask these questions out loud because other folks might have similar questions. And so we can like collectively voice these questions and share knowledge. It's really great just to have that in this space. So thank you all for participating. And please feel welcome to ask any questions that do pop up if you have any more.
Okay, well, that seems like the end of the questions to me. So I'm going to say, reiterate what Craig said. Thank you, Lindy. Thank you, Deb. And thank you, everybody, for joining us. And we hope that everybody has a great rest of their day.
Thank you, everyone. Thanks, Lindy. Great job.
Thank you. Yeah, great job, Lynn. Thank you, everyone.
Thank you so much,
I know.
everyone. Bye.